And it is time for the word on Wall Street. Top investors watching your money. Joining me right now, the University of Akron Endowment Fund Chairman Dennis Gartman, Payne Capital Management President Ryan Payne, and Markowski Investments President Chris Markowski. Great to see you, gentlemen. Thank you so much for being here. Dennis, kicking things off with you. With a market that is bouncing after a steep sell-off yesterday, the S&P 500 having its worst day since October 2020 yesterday, down 3%. The Dow is now in correction territory. The NASDAQ in bear market territory. You've been negative on this market. You've been right. What do you want to do here?
I want to be less bearish. I'm almost to the point of turning modestly, and I mean very, very, very modestly bullish for the simple reason that we've sold off so violently since January 5th when I turned bearish of the stock market. We've got the CNN Fear and Greed Index down to 13. Anytime that gets under 20 and turns higher, that usually gives you a bounce. So I think we might have a bounce, but that's all it's going to be. It is still a bear market. We're going to be lower 6 months from now than we are now. We just may be a little bit higher over the course of the next several days. We've had a huge rally in gold. I'm going to sell a little bit of my own gold this morning into this rally just because I think that that's due for a modest correction to the downside. Probably a little too many people on one side of the bear market in stocks, probably a few too many people on the bullish side in gold. So I'm demonstrably less bearish than I was in the stock market, and demonstrably less bullish than I was in the gold market, just for a day or two or three, maybe a week or so. That's all.
Dennis, the price of oil is clearly raising lots of worries, whether or not it's going to cut into overall economic growth. Market is down 18% on the NASDAQ year to date. The Dow is down almost 10% year to date. S&P 500 down almost 12% on some worries that this oil shock causes a recession. Your thoughts on the possibility?
I think it's not just the oil shock that's going to cause a recession. It's the wheat shock. It's the soybean shock. It's the cattle and livestock shock. It's the nickel shock. It's commodity prices generally around the world are demonstrably materially higher. So I think that is the shock. Plus the fact that I think the Fed will err, as the Fed has consistently done in the past, and take the yield curve to an inversion over the course of the next 6 months to a year. We'll take the overnight Fed funds rate above 2.5%, which will get it above the 10-year yield. We'll have an inverted yield curve, and inverted yield curves always beget recessions.
Yeah, and meanwhile, oil prices are up this morning again. We are looking at 14-year highs, Ryan. As you heard here yesterday, House lawmakers did introduce that bill we were expecting to ban Russian oil imports. President Biden apparently reportedly traveling to Saudi Arabia. He wants the Saudis to pump more oil the way he wants the Venezuelans to pump more oil, but no word on Canada. Canada is suggesting that its oil could replace America's imports of Russian oil, but he needs to approve the XL pipeline. Your reaction to the move in oil?
Yeah, I mean, I think bottom line is it's a very, very small amount that we actually import from Russia. It's something like, 700,000 barrels a day. Put that in perspective, Europe's importing like 4.5 million barrels a day from Russia. So I think it would be very easy for us to offset if we put sanctions on Russia. We don't import their oil, whether we get it from Venezuela. It's hard to believe we're trying to negotiate with the Saudis. That's another story altogether. But it is a very, very tricky position to be in here, because if you ban Russian oil, does that push the price up even higher? And does that benefit Putin, who could maybe offload more oil to places like China? And for the Democrats right now, if you're Biden, it's a very tricky place to be, because if you push inflation higher and you push oil prices higher, what does that mean with the midterms? So it's really dicey right now. I mean, I did fall off my chair almost when Dennis Gartman said he might get a little bit bullish here in the short term. But, if you really look at our economy in general, you really need oil to get to like 130 a barrel before it becomes really prohibitive to the economy. So, I still think the economy is going to remain strong here. I think oil prices could go higher here, but prices have gone parabolic here. And to Dennis's point, when you start seeing big moves up in commodity prices, and he's talking about gold, you may get some sort of sell-off here somewhere, just because prices have ratcheted up so much over the course of the last couple weeks. And you could see some profit taking here because of speculation. So, which makes me a little more bullish on the economy, than Dennis usually, but we're on the same page today, so I'll take it.
Well, look, I'm hearing that there could be a vote on this bill to cut off Russian oil this upcoming Wednesday. But we are watching to see how Congress takes this up and who votes for it and against it. Chris, the impact of this war on Ukraine is far and deep, and many people expect that we could see China follow Russia's lead and invade Taiwan. You say that's mistaken. You are not expecting that.
I'm not for cancel culture, but cancel culture most certainly is working against Russia right now. And I think that the Chinese are taking a look at what's happening to them and saying, geez, this is going to give us a bit of a pause. You know, maybe LeBron might cancel us after this. You know, maybe Disney might decide to pull out after this. So I think that what's happening to Russia right now is going to give them some pause, simply because, again, China always works in its own best interest. And if they feel that, you know what, it's better to do business with Europe and the United States than it is Russia, they're going to go ahead and they're going to do that.
Yeah. Yeah, it's a great point. I think that everybody was surprised by the strength of the Ukrainian people and the defiance of President Zelensky. What does this mean for your investments, Chris?
Well, I'm different than maybe what Dennis does there. I'm a registered investment advisor. I buy companies. I look at buying companies, not so much buying stocks. So I don't even look at things 6 months down the road. I'm worried about where things are going to be 5, 10, 15, 20 years down the road. And that means I'm buying high quality, fundamentally sound companies. And if you do that during any point of distress, you're going to do well, whether it be during the Great Recession or whether it be during the pandemic. To freak out over short-term movements in the market, to me, is an exercise in futility.
And does that mean you would recommend buying stocks or selling into strength today?
I dollar cost average every single month. I don't try to time what's going to happen next week, next month, because I'm not able to do that, nor do I know anybody in the history of the planet that's been able to do that with any sort of regularity. So absolutely, you continue to buy high quality companies on a regular basis, and over time, you will do well. It's not a matter of if, it's just a matter of when.
Yep. Dennis Gartman, Ryan Payne, Chris Markowski, great analysis. Thank you so much, gentlemen. Have a good Tuesday, and we will see you soon.